Hello and welcome to India Market Open. It's finally getting closer towards the end of the week. It's been rough, guys. It's been very rough, not just for the broader markets, but the frontline index also cracked in trade yesterday. The whole universe pretty much seems to be coming off. Yeah. But there could be some relief, hopefully, after such a big fall. A little bit of a dead cat bounce cannot be ruled out, I'd imagine, or I'd like to hope. And I mean, for our viewers.
after a 12.5% crash from the peak and a 5% gash in small caps in a single day, it's easy to bet your last dollar that today will not be as bad. At least, yes, maybe.
As bad. So yesterday we were talking about how deep is the red, and you know, fundamentally there is a fear factor which needs to dissipate, which I suppose will happen. The 15th March is an important date for many, many reasons, and this is what has led to some of the concern. IDs of March. So 15th March, Friday, becomes an important day. Will you see that uncertainty going in? There's a stress test, there's electoral bond data going to be out on that day.
There's tax harvesting.
Yeah, but 15th March specifically.
Yeah, March is painful.
Yeah, and March is painful on top of it. So
will
all
we
of
see
those
an
things.
et tu Brutus?
maybe. But maybe a recovery today, hopefully, like Samina said. Having said that, what we're going to try and do on the show today is try and give you as much information as possible to make the right decision, because frankly, this is not an opening that one can predict very easily. I don't think anyone in the market right now will come out and say this is exactly what's going to happen. Having said that, let's take a look at what global cues were indicating. It was a mixed kind of a bag as far as global cues are concerned. The mega cap tech rally seems to have paused, at least for a breath, and that's what's led to those mixed cues on Wall Street. NVIDIA kind of dragged down not just the NASDAQ, but the S&P 500 as well. Not a massive slide, 1.5%. But you saw an Apple and other counters like that showing bits of pain as well. The US 10-year is something that I would like to highlight, because those concerns over there on the kind of inflation data we saw. Remember, PPI will be out later today. That's the Producers Price Index, gives you a more wholesale kind of a picture. It's estimated to grow at 0.3% in Feb. It's the last big data set before the next Fed meet. Nothing is expected to happen in March in terms of rate cuts, but all of these data points then become important, and hence let's look at the 10-year, which has been sort of inching up by and by, so 4.19% on the 10-year as well, and that's on the back of inflation outlook. Crude is a bit of story. So crude had a jump, 84 to a barrel on the Brent, because since January this year, Ukrainian drones have been mounting attacks on Russian refineries. Now, wherein we sort of kind of forget that war is still on. In this part of the world at least, but now the tactic seems to be to attack Russian refineries to hit their economy. That has been going on, and then you saw a bit of a pain as far as Brent is concerned. Asian markets are largely mixed, no clear cues from there either. So if you're thinking of a clear direction, say globally, that's not happening. Look at it. The Nikkei typically down right now because all of the data is pointing to a possible rate hike at this point. So quite contrary to what's happening around the world. So that's as far as Asian markets are concerned, but we should take some time to recap what happened yesterday, Samina. And the close was truly one which left the market wondering what is happening. And we at NDTV Profit had a whole host of experts coming in and saying that you might see trouble for some time.
You might feel trouble for some time. And they've talked about this, right? They've talked about this for months at a stretch, saying that the broader markets look expensive. It's time to rebalance your portfolio. In fact, I think every advisor worth his salt has actually gone out and told investors that while past performance has been very, very great for some of these broader market names, it is time to rebalance portfolios, and I think this is a great opportune moment for investors to actually go out and do that. Sure, the falls are very painful. The portfolios have cracked more than the benchmark has actually cracked. But if you put all of that in perspective, the falls that we've seen are not a patch or a drop on the kind of gains some of these stocks or sectors have seen from April 2023 in the last 1 year. So while it looks painful right now, let's not forget that investors, traders, bulls on the street have made jars and pocket full of money. So nothing to be really concerned about in that sense. If we talk about the returns more holistically, implied Nifty indicating to another flat morning. A dead cat bounce cannot be ruled out after a pretty rough last few days. But let's take you through what is or what worried the markets over the last couple of days in terms of sentiment. Firstly, you've got margin calls from brokers. Now, those are also gone up. Remember, leverage trade was the big game for a lot of traders and bulls on the street, and a lot of that action was focused in the broader markets. But with liquidity concerns, with the fact that some of these counters have been declining so very sharply, brokerage calls have also gone up substantially. So you're tightening your wallet in that sense is what could have led to limited sort of trade on the street. Apart from that, the ED raid on Hawala operator Tibrival has also spooked or freaked out a lot of those stock operators who operate in the broader markets. They, of course, a little more concerned, a little more cautious. These operators now pretty much gone into hiding as we see it on fears of ED raids on them too. Apart from that, it's also the March effect. Remember, in the last 23 years, 56% times, which is about out of 23 times, 13 times the markets have actually ended negative. Couple of reasons for that. It is the year end, so you want to clean up your books, take off any risky assets that you see. You've also got tax harvesting that happens. So those are a few factors that could have spooked the sentiment. Of course, and the SEBI did its job and did its job well of talking about froth in the markets. I think that one statement did what was required to be done. You know, all that talk by fund managers, FIIs, anchors, journalists couldn't do much.
So Samina, I think, and Niraj, you have to look at it this way, that SEBI chair has spoken about what she's already been doing. SEBI has already sort of told the mutual fund industry that look at the kind of build-up in small cap funds. There's a stress test coming on March 15. So 3 key reasons with that at least I saw. And I want to start the first one by just playing out a small clip of exactly what SEBI chief Madhvi Puri Butch said. Let's just play that out to give you some perspective.
Small and mid caps. We've looked at the data, we've analyzed it in conjunction with the industry. Are there some companies and segments which are being re-rated today? And that's a good thing. So yes, that is also true. But are there others where the valuation parameters seem to be off the charts and not supported, you know, by fundamentals at all? So it's not a one size fits all. It's there are pockets of re-rating, which is good. There are pockets of froth, which is not good.
So there are pockets of froth that are not good. That's the statement that the market seems to have held on to. And that has caused some concern. Couple that with all the regulatory action you've already seen, whether it's from an RBI or from a SEBI on a JM Financial, on an IIFL, before that a Paytm. So that's building a bit of concern. The other thing is the stress test. The stress test has indeed become a stress point. So if reason one is froth, SEBI chairman speaking of froth in the market, second reason would be the stress test, which will be on 15th March, Friday. Essentially, mutual funds have been asked to give details of how they would react if they had large-scale redemptions. Will they be ready? And, you know, those parameters have been given by SEBI. They have to come up with their answers. So that could be one key reason. Remember, one mutual fund even stopped lump sum investments into small cap funds. Was that a signaling that the market saw, which is why the bigger crack in the broader markets? The third, I would say, is again 15th March. Electoral bonds reveal is a big factor, and you saw that in the kind of stocks that got hit the most. Of course, it's relative, but if you look at the top Nifty losers, it gives you a fairly clear picture. So government run companies, those companies that have run up because of capex expenditures did get hit. So on 15th of March, 5 p.m. is the deadline for the Election Commission to put out details of who bought electoral bonds for the last 4 years, and that may be causing some concern. Just a quick look at who sold and how much yesterday and who bought. And that fund flow data is interesting because you did have FII selling 4,500 crores and DIs buying yesterday about 9,000 crores. You can put that down fair bit to ITC, which was the one outlier.
I want to add a couple of fund managers even went out and bought stocks like HPCL and Oil India in yesterday's trade. So while there was carnage, opportunistic investments were happening.
So then is it the retail investor that has, you know, lost out yesterday? Will they continue? Niraj is joining us to set up what you can expect today as well, isn't it, Niraj?
Yeah. So just one point on the fund flows as well yesterday. If you net out ITC, the actual FI sell number northwards of 15,000 crores. So it's a very large number, because you can safely argue that BAT, which sold out, is not the FI balancing out number, because that's a global promoter institution of sorts. So FIs which bought into ITC kind of negated that sell number, which was very, very large. So keep that in mind. However, what happened in trade yesterday, and because small caps are in focus, here's some data. The Nifty small cap 250 recorded the biggest 3-day decline since March 2020. So COVID lows. So that's the first interesting piece. Here's a stat. Only 13 stocks ended with gains of over 2% in trade. That's it. One of them was ITC. So net of ITC, only 12 stocks out of the whole universe had gains of more than 2%. That's the brutality of the fall in trade yesterday. And the small cap index is down 12.5% from highs, but it's not the largest fall in history. That is not to say that that is what the small cap index will do, but maybe just give you some sense of the peak to trough of what the small caps have done in the past, to just give you this perspective. So if you just look at what's happened in the past, Jan 2013 was a peak. The trough was August 2013. The decline was 51%. In 2016, 21%. 2019, Jan 18 to August 19, 41%. Jan to June 22, about 24%. I've removed COVID out here because obviously it was an anomaly. Thus far, we've had 12.5% fall. Can we do more? Maybe. Just very quick stats here again. The small cap funds, which is the total mutual funds, the AUM has increased from 13.9% to 23.7%. 13.9% in COVID lows to 23.7%. Q4 flows, however, into mid-cap and small cap funds are now trending to average. They peaked up in 2023. They're now trending at close to average. This is from a Jefferies note. But the more interesting piece is the third one, that the small cap share in overall markets is currently just at 14%, not at the 18% which was there in 2018. So the AUM is high, the overall share of stocks in the overall market is low. Just imagine the kind of buying pressure that comes in on a smaller universe of stocks, because the AUM is just so large. And I think now that the fund flow is receding a bit, maybe that just adds to a bit of sanity. So small caps, clearly the pain points. Not to say that this is over, but yeah, a bounce could be anticipated. But as you said, 12.5%, way lower than the kind of falls that we've had in the past.
Yeah, so we shouldn't be getting nervous is what we are trying to tell our viewers. And also, I think, Niraj, it's so important to keep all this in perspective. Most investors have made tons of money, right? Sure, you're getting that last chip, and it's very difficult, and that's why it's tough to be a trader, because you've got to not just call entry, you also need to call an exit, which most traders get wrong more often than not. So if you're an investor, I'm sure you're not concerned. All you need to do is rebalance your portfolio, get in an opportunistic investment as and when that shows up. But I want to bring up another very interesting data point that I came across. 1/3 of listings that have happened in FY24 are actually trading below their listing price. And that is interesting, because remember, that market has been flourishing with massive inflow, not just in the last few months, but in the last 2 to 3 quarters. Just to give you a perspective on those numbers, data shows out of 73 companies that listed in the primary markets raised about 60,000 crores, 26 of them are trading below their listing price. Companies like Credo, Brand Marketing, EPAC Durables, and Muthoot Finance are down anywhere in the range of 36%, 32%, and 31%. So that's what's been happening with listings that have taken place this quarter. Talking about listings, yesterday you had JG Chemicals that listed. It was rough. I mean, they couldn't have picked a worse day to hit the markets, declined and went home with a loss of 16%. Today, a very sort of a listing that has taken up a lot of interest or attracted a lot of retail investment in that sense is Gopal Snacks. They're debuting the Ghatia guys.
Yeah.
They might just get the better of it. They've luckily picked today instead of yesterday, but grey market is indicating a premium, so this one could be seeing a pretty decent listing. At least we can hope for it. But remember, there's a very, very big retail connect to this, so there will be lots of euphoria and excitement around this one. But I believe it's back to Niraj for today's setup.
Yeah, so now let's just breeze through. I mean, we've kind of established what's happened all through. Just very quickly, the trade setup, quant indicators are not favoring any sharp pullbacks. The only respite is that the Nifty PCR is at 0.65, and therefore that is a positive. Sorry, we missed out the number here, but 0.65 is the critical element, and that is a small positive. From the call and put option data, I'm looking at the put option data, 21,700 strike has the maximum OI, 76 lakh contracts, a key level to monitor. If indeed the markets were to unravel further, then that is the key support level. If that gets broken out or taken out, then some of the unwinding that could happen could actually add to more pressure. And of course, Tamanna spoke about crude, spikes in crude prices because of this attacks that Ukraine is doing on Russian facilities. And if the crude spikes gather for the steam, that could be a further sentiment negative. So that's the trade setup for the day. What about specific stocks, guys?
Yeah, there are a few handful of counters that we want to watch out for in today's day of trade. Let's start with what I have in terms of the top stocks that we are picking up on this morning. So you've got KEC International. Now this is a company you want to watch out for. They've bagged a pretty large order, 2,257 crores worth of order. The stock, like every other broader market counter, went home with a cut of 6%, but there could be some relief coming in on the stock on back of this order win. India IFL Finance, watch out for this one. The company has approved raising 1,500 crore rupees via the issue of shares and 500 crore rupees via NCDs on a private placement basis. Remember, with everything that's happening or going on with IFL Finance, things have turned rough and fundraising seems to be the only alternative for the company right now. So that's what they're looking at. The stock could see some relief on back of that. This is a smaller company, but worth a mention because they bagged a massive order. Indian Hume Pipe is what I'm talking about. They've bagged an order to the tune of 230 crores from the Telangana government. Small company, but mentioning because this order is 20% of their order book. So putting that in perspective, it's going to be a big move on the stock, largely because of this massive order that's come through. Execution is going to be anybody's guess, but for now, Indian Hume could be one big mover in trade today as well from the broader markets.
Yeah, so a couple of stocks that I wanted to pick out, and remember, this is a day where maybe stock-specific movements might not really be there, but fundamentally, at least these are companies which have something good going on for them. Tata Motors is one of them. It's, you know, the news has gotten drowned in all of the market fall sort of atmosphere, but they have signed an agreement with the Tamil Nadu government to set up a new manufacturing plant. The MOU will see a 9,000 crore rupee investment over 5 years. And Tata Motors fundamentally is a stock which has been showing an upside time and again, even after all the news, the demerger news as well. So this is one that I would keep on my radar. Another very important announcement which took place yesterday was, remember the pain that EV players were feeling once FAME 2 had ended. There is another scheme now, a replacement scheme of sorts, which has been announced to promote the adoption of electric mobility. Will not really help four-wheelers or passenger vehicles, but for two-wheelers, three-wheelers, definitely it's important. It's called the Electric Mobility Promotion Scheme 2024. 500 crore rupees is the outlay, and it could be positive for a Bajaj, a TVS, a Hero Moto as well, maybe an Atul, Mahindra. Some of these companies may benefit. I wanted to pick AU Small Finance because it was maybe one of the relatively lesser hit stocks yesterday. Even to end 85 paisa up yesterday was not a small deal. And there's a Motilal Oswal note out today which maintains a buy on it with a 720 rupee target. It says ROA will be suppressed in the near term, but the diversification in their lending portfolio is being seen as a benefit. They estimate the loan CAGR to be 25% post-merger. So the merger news might be an up over there. In fact, private banks need relatively, everything is relative, were not half bad.
No, we heard
Kotak Mahindra.
We heard a buy call yesterday on the closing show on a private bank.
Yes, absolutely.
So, absolutely right. Exactly. Just very quickly, just watch out for metals because amongst everything else that happened, there was some serious long unwinding that happened in Nalco, SAIL, Hindustan Copper, and Tata Steel actually saw some further short build-up as well yesterday. Most stocks did, but the kind of long unwinding that happened in some of the metal names, Nalco, SAIL, and Hindustan Copper in particular. So price action and the OI addition kind of tells you a story about what happened there. I think we missed the graphic here, but that's the first set of stocks which are interesting. HAL, the Defense Ministry has signed 2 contracts with a combined value of 8,000 crores. So watch out for HAL. And watch out for Cyient. Amongst everything else, it's signed a multi-year services agreement with Airbus for cabin and cargo engineering. Watch out, maybe, just maybe, Cyient could have a good day. If today is a bounce day, then expect HAL, Cyient, Dynamatic, and a bunch of others to show some good moves. So that's the set of stocks to monitor.